Good 20th of September, if we can believe this, as we're flying through the ninth month of the year on this cloudy, with the sun going to rise in about a half hour at 6:43 in the morning on a seasonably nice early fall, 63 degrees from just outside the great state of Michigan in the communist country of Canada. This is International VINCENZO'S Gold Crypto Investing, where we follow notifications, subscribe to the channel, like it, share, to get all that truth and integrity you've come to expect and need from a cryptocurrency and XRP insider. Non-paid, non-promoting, and 100% free. All I ask is you to share it, follow it, and subscribe. And as we take a look at in our 10-minute update before I got to get back in on day number 4 of day 60 or 50 or 40, whatever it's going to be, of 10 hours a day, 7 days a week. But after you travel and wake up and get back home, it's a 14-hour day. But we're going to look at the U.S. dollar here, and we can see that major support level that we had down here at about the 103.25 for the U.S. dollar. We bounced once back here in February, then we bounced again back here in May, and then we bounced again back here in August, September, right here. See that? Or that was more like end of July, beginning of August, and then we bounced. And we have this major upper resistance at 120 that we've been watching since the COVID started money printing. Dollar goes down. COVID officially raises rates. Dollar goes up. Then we had the big consolidation, and we said we had to watch here to see if this was a bullish consolidation or a mid-ground consolidation to topping out pattern, right? And that has major implications on the stock market, on the cryptocurrency, the gold and silver bullion market, right? But if we get into the Bitcoin price, now that we see the dollar starting to have a nice bounce, but the cryptos have detached now. The whole narrative that it was a digital currency went away, right? And then they said it was a store of value, and obviously that goes away because the store of value can't go up 75% to 90% and then crash 90%. That's not a store of value. A store of value is keeping your money from the currency and putting it into something that maintains its value and purchasing power over time, if not steadily increases in purchasing power in comparison to whatever currency that you swapped out to hold. But it can't go down 95% and then back up and then back down every other day. That's not how a store of value works, because that store of value, if you're doing it today in 25 years, when you put it into that store of value, you want to be outpacing the purchasing power of that currency that you had, but you want to be somewhat near or above the purchasing power when you did it. You don't want to be guessing in 20 years, is it down 75% over the last week when I got to go use it, right? It's not how a store of value works. These are speculative assets, right, and highly speculative. And now they used to say it follows the dollar and it was a dollar hedge. It's obviously not a dollar hedge, because it doesn't follow the dollar in any rhyme or reason. It did for a very short period, but that's a discussion for another day. I don't have time for that right now. You can see top out 1, top out 2, rejected. Now we're moving up to the moving averages, and we're either going to get rejected here or come back and fight and retest this 30,303, and then either try to catapult to 40,000, or it's a classic hook nose Jew bearish reversal, breaking a pattern of a symmetrical or a rising channel where you have uptrending upper resistance, uptrending lower support, same width in the channel all the way through, right? And those are bullish continuation patterns, but bearish reversal patterns at the top. Usually a rounding top is noticed, as seen here, as the buyers or the bulls become exhausted and the sellers or the bears start to take over the market, and the price is going to come down. You see the volume continuing to decline, but that 30,300 is a major resistance at the bottom part of this VP volume indicator. And then, as we know, the 19,000 or the top part of this blue trading zone is a major support area. So that's what we're going to watch. Then we're gonna end out here because then I gotta get in the this fucking plant that's over here. Here, I'll show you where it's at. That fucking plant, Valiant, right there. I gotta get into there again for all eternity, right? But you can see the Bitcoin or the XRP price is coming down and consolidating still. If we zoom in the daily time frame, you can see this beautifully. We had a rising channel, right? Upper resistance, lower support, uptrending, just like the Bitcoin price. Besides, the outliner was the Judge News, and then it came back all that gang. But notice on that wick bottom, on that epic flush, the epic FUD, the epic concern, and a hysteria that was going on in the big 25% dump in an hour. Look where it wicked down to. I didn't move these lines. They were already set. Came right down to it because that's major support level. And then we got a nice bounce off of there. And we could come back up now and try to retest this 57 cents or even as high as the 66 cents, right? This upper resistance in this rising channel. And then maybe come back down. Or we're going to get rejected by the newly crossed short-term moving average over the mid-term moving average in blue, or the 100-day, and eventually I believe that's going to cross and flip bearish, but we could start to trade out here before I think eventually we come down to that 37 cents, and then we could get much lower than that in this VP volume indicator down here, right, which is 28 to 31 cents. It's in red, and I just deleted the orange trading box all last on a defense shithouse. On accident, it was a mistake. I'll put it back later. But there's that red trading zone that we've been trying to show you for a while, and that's what we've been trying to do. So when we have the orange trading box, but I think eventually we're going to come down there, and that's when a capitulation advisory turns into a capitulation warning if we get into that red trading zone, because we haven't flipped and confirmed below a capitulation line in about 3.5 years, and we had a 60% drop upon that confirmation last time. But right now in the short term, that's for another discussion, for another time into the future in the far right machine. But first resistance, 57 cents. If we can get over these moving averages here, we're trying to work our way through. Outside chance at getting up to 75 cents as a classic double top reversal pattern. And then we end up, before you know it, right back down at 51 cents and then 37 cents. But in the summary, 57 cents major upper resistance above the moving averages. Outside shot at 69 cents in the coming months or weeks. But most likely, if you got into here, you'd get rejected somewhere at the 57 to 61 cents, the uptrending resistance, and then end up back down in here. But we're going to watch out for that over the next several days. And obviously, if you break that 42 cents, you come right to 37 cents and probably slip that and come all the way down here to 31 cents. Like, subscribe, and share to International Vincenzo's Gold Crypto Investing. But I must get into this plant. We have a safety meeting in 9 minutes. A quick update on the XLM. We've still got rejected by the 13.5 cents, same as yesterday. 10.5 cents is major lower support. And then obviously the 7.75 cents, the top part of the orange trading zone. I'll last on a defense to get my shit together. It's the shit house. But right now you got the moving averages, the long term are the 200, and the short term, the 50 at the top, and then running parallel in the middle, and a tightening, sort of like a Tyrannosaurus or dinosaur pattern in the moving averages. That's showing you the nice coiling up in the price as confirmed by the dots. And we're either going to get a big move with volume to the upside or to the downside. And to the upside, 13.5 cents, you have to break to become short-term bullish. And then 10.5 cents, if you break on the downside, you're short-term bearish. Right? Like, subscribe, and share. Peace and love.